Oh man, look at this crazy, crazy market that we have right now, right? Stocks are down, stocks are up, stocks are doing nothing. Oh, it's crazy times. Happy Thursday. Had to think about what day of the week it was. It honestly feels like it's Monday for some reason. I don't know why. But no, it's Thursday. Tomorrow definitely does not feel like Friday. It's earnings season and it is utterly crazy for myself, crazy for a lot of other people in the stock market too. A lot of people are really beating themselves up because a lot of people are very angry about certain stocks. I'm seeing a lot of hostility on social media of people saying, man, how didn't I see this was going to end up happening? Talking about stocks going down by double digit percents. And then on the flip side, there's people that are very disgruntled because they're like, man, how did I not see this happening on the good side of things? Stocks are up by double digits, aka Microsoft. Very, very positive earnings. Very, very positive earnings. And then you look at like a stock like Robinhood, a stock like Meta. SoFi yesterday was, oh man, SoFi was fighting for its life yesterday. So you're either very disgruntled, you're either very happy, and not many people is very much like in the middle per se. Now, overall, I am very happy because one, I bought more SoFi shares yesterday, talked about that in yesterday's video that I did based all on SoFi. So if you are a SoFi bull like me and a long-term investor, you're going to appreciate yesterday's video. I gave a lot of motivation, especially around people that have a very farther outlook around SoFi. I've been invested in SoFi since February of 2024, and I have tens and tens of thousands of dollars invested in SoFi, and I'm also up by on my public account, which is showed yesterday, not very much anymore. My private account, I'm up well over 5 figures of profits because my average on SoFi is in the single digits. Now, when it comes to Robinhood, I want to talk today about Robinhood and Meta primarily. The Federal Reserve yesterday, I'm going to talk about it for a little bit straight off the bat here. But today's video is going to be pretty much all about Robinhood and also Meta. I did buy some more Robinhood shares yesterday on my public account that I made for this YouTube channel right here. And I'm also going to be talking about when I would maybe start buying more shares of Meta, because I do have a Meta position. I am a Meta bull. If I had to pick any of the big companies out there, I would honestly really choose Meta. The reason being, and I've said this many times before, this might seem kind of like a very... It may not seem like a well-rounded reason, but it does go to a lot of stuff around the company. Mark Zuckerberg, I do believe the guy is very much like a Elon Musk. Very much. The guy's an innovator, younger version of Musk, basically pretty much. That from Robinhood, I look at him as very much as a younger version of Mark Zuckerberg, a innovator. That from Robinhood, Mark Zuckerberg, Meta, the two of them are innovators, and when their stock price or company goes down, they pretty much come out and say, hey, we're going to think our way out of this, which ultimately means we're going to grow our way out of this. I really do like investing in companies where you have the management, or rather the top dog, the CEO, is pretty much pushing the company forward. And Mark Zuckerberg, has he not led Facebook Meta out of recessions? Of course he has. Yeah, he has. Many, many times. I haven't been in the market when pretty much during like 2014 when it was essentially Facebook, and there was a lot of drama, especially during those days. But I got into the market during March of 2020, and there was a lot of fears around, hey, like, what is going to be happening with like social media into the future? And then you got 2022 where Meta basically pretty much fell, I believe, like 70-80% from its highs because their earnings were pretty much deceler, or I don't even think that's a word. Oh boy, word salad. Welcome if you are new, by the way. I keep things real around here. If you want to follow along, definitely hit all the buttons, subscribe. I put out videos on this YouTube channel Monday through Friday. Saturday, I upload free educational content. But on a serious note, Mark Zuckerberg is one of those people that he will go ahead and be in a sticky situation and he will think himself out of it. And those people are, first of all, not every CEO is like a Mark Zuckerberg. I've been invested in companies, I've been invested in penny stocks where CEOs have literally just thrown in the friggin' towel. Okay, I know that may seem crazy to really understand, but the stocks that I am covering are very well-known, phenomenal management team. If I go on the penny stock market, like, I can show you stocks that their management team is in, their management team sucks. Okay, they don't care about their shareholders. SoFi, I've talked so much about Anthony Noto. If you follow me on this YouTube channel, you know my great opinions about him. Lisa Su, she's one of the many reasons why AMD is where it is today. Vad Robinhood just spoke about. Alex Karp, phenomenal CEO. Zuckerberg already spoke. ServiceNow, McDermott. It's honestly, it's like I'm a new investor in ServiceNow and doing my own due diligence around everything about that company, how it's very AI integrated software. And the CEO, I mean, the CEO is with Jensen from friggin' NVIDIA, right? So, great there. So, the thing about it is that great management teams are not in every single company. But stocks experience volatility because stuff happens. Or, if you want to go ahead and use a non-PG term, shit does happen, right? It really does. So, Federal Reserve. What do we learn? What do we gain? To be honest, Kevin Walsh, the guy sounds like a robot, in my opinion. If you're a Kevin Walsh fan, I mean, hey, the guy literally sounds like a robot. I was listening to him yesterday, and I'm like, man, this guy sounds like a robot. He sounds like a politician. It's utterly crazy. My own personal background, I do have a military experience. I did 15 and a half years in the USMC. Fully done with my time in service, retired now. And I've unfortunately met a lot of politicians in my time. I was infantry, spent 10 years in the infantry, multiple deployments, Afghan vet. And politicians a lot of them are honestly just robots, and I just can't stand politics. And listening to the new Fed governor, he just sounds like a robot politician. Hopefully he doesn't watch my videos, but it would be a shell shocker if he actually does. But I mean, what did he say? What is anything different? The Federal Reserve, or rather I should say, he does not want the Federal Reserve in the spotlight anymore. That's going to really shake up the market, which is not really a bad thing because the Federal Reserve should not be in the friggin' like aim of the market. He really didn't comment about oil other than let's pay attention to the data. He really didn't say anything other too much. He was grilled by a lot of reporters because there are politics at play. However, the Federal Reserve, it was a 9-3 vote to hold rates. 9-3. 9 people out of 12 voted to hold rates. So the consensus in the Fed is that, hey, let's go ahead and hold rates, okay? Are there politics at play? Oh, yes, and Jerome Powell was one of the people that voted to actually hold rates too. To be honest, I've been listening to Jerome Powell since 2022. I'd rather have that person back up just because, like, he sounds a little more, like, lifelike, if that makes sense. But otherwise, yeah, I mean, the Fed is just really waiting on data. Stuff in the Middle East needs to cool down. Oil needs to come down. It really is what it is, right? So that's really my spiel about the Federal Reserve. But when it comes to very much investing in the market, you really should not be thinking about what the Fed is going to do. The Federal Reserve stepped into the spotlight because of the great financial crisis and because of Rona. The Federal Reserve is not supposed to be the spotlight of the market. What is the spotlight of the market? Earnings. Earnings. Net profitability. Hey, is your company on a growth cycle like SoFi, AMD? Yes, your company is. Okay, that is what matters, and that is what's supposed to matter in the stock market. So I'm actually very excited that like the Fed governor very much wants to take the Fed away from the public eye. And a lot of people are criticizing him for doing that. A lot of people on CNBC. And it's like, no, that's not a bad thing. The market has people betting on it if the Fed is going to lower or raise or hold rates. That is the dumbest thing to bet on. What about betting on companies' profitability? That's everything. It really does matter. Is a company growing their revenue? Is a company spending too much money? Is a company facing potential like bankruptcy in the future? Those stuff matters more than if the Fed's going to be cutting or raising interest rates, okay? And to be honest, raising interest rates by a quarter basis point and lowering interest rates by a quarter basis point, it doesn't do dog shit, okay? I remember during 2022, Powell came out, raised interest rates by a quarter basis point 1 month later. Yeah, now we need to raise, interest rates by half a basis point. Why? Because a quarter basis point didn't do shit. So it doesn't really matter. Any of you watching that are relatively new to the market, you got to understand that the market right now is utterly it's a insane asylum. It really is. This is not how a typical market should be. Yes, I got into the stock market during Rona, but I'm a businessman. I'm also a history buff. I have done my history learning and due diligence. And if you look back in time, we're just in a very crazy time period that is probably a generational period. I'm 38 years old. Is there going to be another time period like this in my life? Maybe when I'm in my 60s, maybe even when I'm in my 70s, who knows? Or maybe in my 50s. But I mean, this is not how the market should be. Talking to so many people that got into the market during the 90s, and I know people that got in the market during the 80s, and I've spoken to them, like, this is not how the U.S. stock market is supposed to be. People should not be worried or making bets if the Federal Reserve is going to be doing something good or bad. So that's really my own spiel, and that's my level of risk and my level of just what I see things going on. So we're going to be definitely following what the Fed is very much saying, because that's really the hot thing, in the market. And hopefully it goes away. Hopefully it really does. But if you choose to be in the market, understand this. You cannot change the way the game is played. You have to create your own game strategy. I've done my own creating of a strategy, which I've made life-changing money in the last 6.5 years of being in the market. And I sleep extremely well at night. Don't try to alter the game. You're going to lose. Build a great strategy around the game. We can all have opinions, and I have my own opinion right now about the Fed. I would love the Federal Reserve to go bye-bye, to be perfectly honest. Very much a core libertarian-like principles and stuff. I really feel taxation is theft, and so do a lot of other Americans and people around the world. That is unrealistical. Unrealistical that the Fed is going to go away. However, what is realistical? What is realistical is for you to build a strategy around how the game is being played right now. Right now, let's talk about Robinhood. So, I apologize for rambling on a little bit, but actually, you want to know what? Let's go ahead and talk about Meta first, because I actually have Meta pulled up on the screen here. So, I'm on Meta's website. I highly recommend anyone out there. I'm not a financial advisor, but you don't need to be an FA to tell someone common sense. Common sense. Go to the company's investor relation page for the most accurate level of data. I'll say that again. 1 second. Hold on. Water, cheers. Why does it matter? Because if you rely on social media for people to post stuff, believe it or not, there have been fraudsters in the past posting inaccurate information. Always go to the investor relation page before anything, okay? So, yesterday's conference call, straight off the bat, Mark Zuckerberg very much on the defensive side. What do I mean by defensive side? He was defending pretty much like a lot of stuff around why the company is spending a ridiculous amount of money. And their revenue growth is at a 28%. So Meta has very much been known for delivering 30% plus. That's why it's been so attractive, especially part of the magnificent companies. Obviously, their growth rates are something that are overly attractive, but here's the reality. They're spending way too much money, and it's starting to really show, and Wall Street is very much aware of this. Investors, retail investors are very much aware of this. If you go ahead and look straight off the bat, revenue, okay, 28%, pretty much, right? But then you go ahead and look at cost and expenses. Cost and expenses, right? Keep that in mind. Okay. Income from operations. Income from operations from last quarter, it's going down. That is a very much like red flag. And then you keep moving down all the way down to net income. What do you notice about their net income from the previous quarter? Previous quarter, that was 18,337. This quarter, obviously, we're talking about the B's, the bills. Actually, no, wait a second. That is in mills. Mills. Anyways, it doesn't matter. Just look look at the numbers on the screen, right? So last quarter it was 18,337. Now it's 15,848. Okay, their net income is going down. That means they're spending way too much money. They really are. You got 4 gigantic companies spending crazy amounts of money. Now, one of those 4 companies are now cracking. Okay, we're starting to see the cracks. Meta is showing cracks. As for Google, well, I mean, Google's cloud business is exploding to an unknown level of how high it may actually go. So nobody knows how high Google's cloud revenue is going to go. That's what's kind of really saying, okay, we understand this, but is Google stock price in the gutter as well as Meta? Is it going down? Yeah, because people can do the math and people see the numbers. Amazon. So as for Amazon, if Amazon starts, or let me just say this. If Amazon doesn't put out very, very well-rounded numbers, you could see Amazon very much in the same boat as Meta, and it's ultimately very much going to show. I mean, Microsoft is spending a tremendous amount of money on CapEx, but Microsoft is very different than very much like they're very much set up like different other than like Meta. Meta is essentially an advertising company. Obviously, Microsoft being a software, or rather the top dog is software companies, it's kind of like a hybrid. And then on the flip side, Microsoft is spending the smallest amount of CapEx compared to Meta, Google, and Amazon. So that's also one of the reasons why Microsoft is very much in the green. I did not get a chance to listen to Microsoft's earnings, let alone really do a deep dive, mainly because I had Robinhood's to listen to last night along with Meta, and then I also had SoFi in the morning, and to be honest, I was just utterly friggin' exhausted. So, yes, Meta's numbers are gonna get very, very, like, bad if they continue to very much spend the way they are. And where can Meta basically pretty much go to? Meta can very much go to, well, you want to talk about like 480? You want to go down lower to maybe 440? You want to even go down to maybe like 300s? When would I really start buying back shares of Meta? Because earlier this year, I actually just popped up my public profile here for this YouTube channel. That was actually by accident. So anyways, I'm doing a public account profile challenge for anyone new looking to take this sum of money here to 6 figures in 17 months. And this account challenge started 2 January this year. Already up a sizable amount. Very much recovering today because of primarily AMD. But I mean, my Meta position on this account was very much close to about 5,000 earlier this year. And I scaled out of Meta and I rolled a lot of that money into AMD, baby. Oh, yeah, I bought a lot of AMD shares with my Meta money. So glad I did that. Bought a lot of SoFi shares, bought a lot of Robinhood shares. So the whole thing about is, when would I actually, like, start buying more shares of Meta? First of all, I'm a Meta bull. Understand that. I love the company, and I do believe in the long term that Meta is not going to go away, but they're going through a spending problem. Obviously, the chips are benefiting money, and when Meta stops spending a ridiculous amount of money, then the money's going to come back into Meta. But if Meta gets down into like the 400s, yeah, I'll be a buyer. If Meta goes down lower, I'll be a buyer again. Here is another philosophy of mine. You're never going to buy the bottom. You're never going to sell the top. You got to keep saying that in your head. 2022, 23, when I learned all this stuff, I actually bought some lessons from some 7-8 figure traders, investors that pretty much taught me pretty much all this stuff. And I also did a lot of my own due diligence as well too. And that was pretty much like a lot of the philosophy that I was very taught by mentors. Everyone in the market that has stuck around for the long haul, we all have mentors. We all have people that we look up to. We all have slogans that we use, not lose. Word salad once again. But yeah, you're never going to buy the bottom. You're never going to sell the top. So honestly, if Meta breaks 500, I'm probably going to buy maybe a share or two. And if Meta breaks like 450, just keeps going down, then I'll pick up some more shares. But I mean, Meta, in my opinion, out of the 4 companies based on Meta, Microsoft, Amazon, Google, Meta, in my opinion, is probably going to be the one to very much break first, where they're pretty much going to. We got Amazon earnings today after the bell. Meta is obviously going to be the first one to really pull back, in my opinion, on CapEx spending. And that's basically going to be a sign that, hey, the chip money flowing, it's going to slow down a little bit. Obviously, that doesn't mean that the chips are going to, it doesn't mean that NVIDIA is going to go bankrupt or AMD is going to go bankrupt. It just means that we're going to see a sizable level. You got to remember that chip companies like AMD and NVIDIA, they produce new chips around the clock, okay? They're always going to be putting out new chips. Just because a chip cycle is over, Meta's going to continuously be buying more chips for the future. It's just like, hey, okay, we can't be raising our CapEx so much anymore. We got to lower our CapEx a little bit. They're still going to be spending their CapEx. Instead of spending 140 billion like Meta, maybe they're only going to be spending maybe 80, 90, 100 billion. If Meta pulled back by 40, 50 billion, it would improve their balance sheet, and it would also really make shareholders probably get a little excited, saying, hey, okay, yeah, this company is not spending all of its profits, right? Robinhood. Robinhood. So earnings dropped yesterday. Once again, you should always go to pretty much their website. Now, Robinhood, if you have never listened to a conference call or earnings, I love their conference calls. They put on such a great show. Even if their stock goes down, it's good vibes across the board. And that's one of the things I really do just like about Vad is that he keeps things very real. He has no problem talking to content creators. I mean, the guy is, let's face reality. The guy is very wealthy. And he'll go on and talk to retail shareholders. Same thing with Anthony Noto. Super wealthy, self-made guy. He'll go on and talk to retail shareholders, okay? So both of them are very much in the retail community for their great companies. Now, very much like Robinhood does this, they put out a bit like a gigantic earning presentation. All this stuff is great. The nitty-gritty stuff is very much what I like to look at here, and I very much like to just pull up straight up pretty much essentially their balance sheet. So this is pretty much like page 2. If you go to their earnings page, pretty much you got the press release, earning presentation, supplement information, Q&A. So essentially this is just more of like, or just the numbers, so to speak, right? So looking here on the numbers, basically pretty much you see a very similar thing, just like Meta. Not as big as Meta. Obviously, Meta, very big, very large spending problem, okay? Very large spending problem. But straight off the bat right here, what do you really see under operating expenses? Operating expenses, you basically pretty much see their operations are increasing. Everything just about their expenses are going up. I mean, are their revenue very much exploding like it was previously, like last year that really sent the stock price enormous? It's very much a night and day difference, but Robinhood is in the same boat pretty much as Meta, which is freaking out a lot of people. But at the same time, you got to remember that Robinhood, and I've talked about this previously before, Robinhood is a risk-on company. Now, you look at their, you go ahead and look at their revenue, and you're like, hey, you know, their revenue is, they're a growing company. Okay, you know, great. But at the same time, understand that there is a tremendous amount of risk that follows with this company. If the market is going down, this company is going to go down because their business model, I don't really like saying it, but it's factual. Their business model is based around people taking out debt, taking out risk, spending money, and also essentially gambling. I mean, that's really what it comes down to. The more people want to gamble, the more this company is going to go to the upside. So in a risk-on environment, Robinhood is phenomenal, which is the reason why I'm buying shares of Robinhood yet again. Because we're not in a risk-on environment. We're really not. You want to go ahead and look at the major indexes? We can go ahead and look at the major indexes here. Major indexes, right? You got the SPY. Very much not like, but if anything, the S&P is very much the one that is holding. But then you go ahead and look at the Qs. I mean, you go ahead and look at the Qs. Maybe we're going to be doing a V-shaped recovery, but I mean, down from its all-time high is like almost 10%. The Russell 2000 small caps, okay, obviously the small caps are doing good, but you go ahead and look at the NASDAQ. I mean, the NASDAQ, yeah, the NASDAQ is not really doing the best. Same thing very much like the Qs. You look at the Dow's holding pretty good, and then you go ahead and look at cryptocurrency. Yeah, big indicator. So cryptocurrency is in a bearish cycle. The market is very much not risk on, because if cryptocurrency is rock and rolling, that means that the market is risk on. So as for Robinhood, they're definitely spending some money. They definitely want to move more into products. They actually do want to get into something like credit card base and stuff. What is my opinion on that? Could it come back and bite them a little bit? Well, then again, I mean, if you really think about it, relying on people to take out margin and debt, that's essentially the same thing as like having like a credit card, is it not? Moving more into the banking area, a lot of people really see that as being like, no, don't go into the banking area. Just stick to, you know, basically pretty much like a brokerage app. Okay. The thing about it that I really like, though, about Robinhood, and the reason I bought more shares yesterday, is because the management team, once again, they're throwing out ideas. They're not just out there saying, well, our revenue is going up, but our research and develop is also going up. It is what it is, right? They're throwing out new concepts, and they're trying to maintain people to pretty much be excited. Ultimately, Robinhood, it's going to come back. And when it comes back, it's going to bust through all-time highs. It's going to be at $200 by the time you know it. And it's going to very much go very, very quickly. So when is that time going to be? It's going to be when the market's going to be risk on. It's going to be when cryptocurrency is doing better. Cryptocurrency is a lot of revenue for Robinhood. So Robinhood has a lot of time to really go through. But I'm going to be buying shares of Robinhood. In my opinion, buying below $90 for me is very much a buy. If Robinhood goes down into the 70s again, I'll buy more shares. I did. If Robinhood goes in the 60s, I'll buy more shares. I did when they went down to the 60s. Back in, oh boy, when was this? Back in, yeah, you're talking about March? Yep, I bought a lot of shares in the 60s. So, hey, I don't mind buying shares of Robinhood. Great company. Hopefully this video really gave motivation for any long-term investors in the market that are very much just scared and nervous. And things will eventually get better because they go through cycles. But it's all about being in great companies that can get you out of a downward cycle. Like I said in the beginning of this video, there are stocks with management teams that throw in the towel. I know that may sound crazy. They exist. I've experienced stocks like those. And stocks like those, during a time like this, they would not make it out. Robinhood is going to make it out of this downward cycle of being risk off in the market. And it's going to be a party. Oh, it's definitely going to be a party. All right, new video tomorrow, people. Amazon earnings and many more to come. Big week next week for AMD and also Palantir. Hopefully everyone's doing well. Later.